Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for March 6, 2023. We'll start with the swing portfolio. Um, so today was a lot of give back. It felt like the whole market kind of rolled over. So a lot of the positions that we held going into the weekend either gave back a little bit or rolled over. We cashed and went short in a couple cases. Some of those shorts we took as intraday gifts because I didn't want to have the same exposure short that I had long. So we'll see how that unfolded. We'll start with Alcoa. So Alcoa, I was kind of quick to get out of because we had three positions long. It opened here and started selling off, and I was just grateful to get out of it. It broke through the PSAR, so we just tried that one short because all the metals were weak. Had the standard risk box, and it kind of drifted lower and went into the winter and closed poorly at the close, and I'm looking for a return to about 51. So we've got about +1 in hand on the open position. Let's do all the metals while we're here. So Cliff was also a nice. We had two positions long. This one sold off even a little faster than Alcoa. So the second position was a scratch. The first position paid off well. That was a stop and reverse because that exit also coincided with the PSAR flip. We had a standard risk box on it, and that one gave us 3. And because I was going to keep Alcoa long, and we got 3 out of that one, and it was already close to where I expected support, I decided it wasn't worth holding it for that little extra gain. So we just took that as a 1-day intraday +3. And then U.S. Steel was kind of the same. We had one position and exited right near the opening where it opened and started selling off along with the other metals. So I hit it at the PSAR. It continued to fail, and I wanted to front run the collapsing dragon a little bit. And you can see here that there was some chop right where you would expect, and then that broke down and sold off. That was another one that this was not as convincing as the Alcoa to me, and so I wanted to cash +1 on that one. So we've got one position in the metals open on the overnight. So 2 out of the 3 metals we cashed, took an intraday gift, and then reduced the overnight risk. All right, Caterpillar was just an orderly exit on 2 positions. It gapped down, was looking for a morning hook, and then it couldn't break through. So about 90 minutes in, we just took the exit here, essentially at the PSAR, and closed a nice trade in the industrials. Now, what's interesting on this one is that it did not fail like the rest of the market or the metals. It just sort of maintained and is coming right to retest the PSAR again. So I'm very inclined to get that long again on that. If we see, if SPY is strong and CAT stronger than SPY, then I'd like to get long here. And if it breaks above the 10-day high, then and the RL10 peak, that feels pretty good. Not interested in shorting that one. There was no sign of weakness on that one, so I think that one's actually pretty stable. Chevron, not Chevron, CVS, sorry. So this is the one you recall. This is the funny one. We had all of these 1-day short, tax collector kind of trades. And then it skipped a day because it was sideways. And then on Friday, intraday in the afternoon, it gave us the PSAR flip. So I said, why not? And put that little wrist box on it. And today it kind of just rewarded and closed very well. And this is +3 on a very kind of quiet move. And, it's above this little support level here. So the next target would be this position right here, like 83 and a half, almost 84. I'd like to see another. That's like the beginning of a great big cup. Boy, would I love to see that come all the way back to here. But we'll play that one day at a time. So that's CVS Pharmacy. Diamonds. This was the speculative one from last week. Remember, it was the most oversold, had the best reward to risk ratio. We got an intraday turning point on it. It held the PSAR flip. That's a very narrow risk box. We got the intraday caught a 2 and a continuation the next morning of 2 very strong days. And then today it peaked and then rolled over. And I was just thankful to get out of this thing at the PSAR flip with maybe my favorite trade of the year on that one. I really like that one. I would go back and listen to the trade framing logic of that one. Why that is such a low risk idea right here is that at that measured support level, it's got a triple bottom and near a 10-day low and 30-day low. So if it fails, we're happy to be short. But if it doesn't fail, it just might be a kind of a move that gets back up to, vicinity the 10-day high, which it almost did. I mean, it got 80% of that move, and we got the fat part of that move. So I'm on 3 positions. So I just, to me, that's about the ideal template for that channeling or overreaction style trade. Devon Energy was another orderly exit. There was weakness in the futures on energy, and that whole thing started rolling over. So I had enough other shorts in the metals that I wasn't interested in this one. But that's a pretty sweet move for about 2R. And this is stabilizing. That could very well be a COTA 2 tomorrow. And if it makes above the 10-day high, then I have to be long. So we will watch this one with great interest tomorrow. Devon Energy. I mean, if it doesn't go up, then, here's some magic. It could go down. So if it doesn't do this, then this is the next price region to the downside. And if there's weakness, you could imagine how if it breaks through today's low, it has a strong move back to 54.5. And we could probably frame that trade pretty nicely. If that fails, then it's back to the 10-day and 30-day low back at 52.50. So the downside is clear too. Electronic Arts. This one was a COTA 2 re-entry. After this 1 day and exit, then the next day was a COTA 2. Today we exited here at the edge of the dragon, initiated a short. I am holding that one overnight because this had been at the end of a Godzilla, and that's a pretty nice move from 109 to 115. And this looked like profit preservation and selling pressure. So I still feel like if there's people that bought it down here that didn't get out today, if that falls down through here, you could see an accelerated selling pressure. So I'm going to give that one an overnight pop, and we'll see how that works. Speculative. Emerging markets, I thought hard about this one on the reversal. I was happy to cash here. I thought about it, span of control, and I like the metals weakness more. But this one, tomorrow, if it breaks below today's low, then I think that could be short down to 39. But I want to wait and see. Didn't want to hold that one overnight. Mexico, same deal. That had less weakness. So the fact that it didn't fail further after our exit to cash this win, the fact that it didn't fail any more than this, it kind of stabilized in here. I'm actually ready to get long if it breaks through the PSAR, and because that's a new 10-day and 30-day high. I think if I go short on that one, because it's Mexico, that's obviously going to be on a 3-minute chart. So I didn't want to hold that one overnight when this is a reliable intraday trader. And if it starts moving to the downside tomorrow, we should be able to get on it pretty quick. So cash and then observe. Brazil, on the other hand, which had been lagging compared to his running buddy in Brazil, we got the re-entry on Friday, like a COTA 2. Today, there was some buying pressure, and it closed well and had a little intraday COTA 2. So I'm really looking for that to break higher tomorrow. And if it gets above the 5-day high, then this is really kind of a gap in here. And that should not provide any resistance at all. So if this can just get through like 28, then it could get to 28.50 in a hurry, and that's going to make that entry look pretty good, especially on such a tight risk box, and we're holding about plus 3R in hand. That could be a nice sleeper trade tomorrow. Intel, was just happy to cash that one. Thought really hard about the cash at the PSAR flip. Thought hard about the short. Kind of regretted not getting it later in the day, but I will be ready if it breaks below 25.99 to get short with about maybe a 20-cent risk. And then the target would be down in here, 25.25. So if that's my risk tomorrow, then I could get 2R to the downside. If that fails, then the 30-day low is in play. That's 2 more R. So I like that one there. To the upside, I'd have to see the S&P up, the Q's better than the S&P, maybe semis better than the Q's. So I could be persuaded, but maybe I'm making that too rigorous. I think if it gets above the 5-day high, I got to get it. That's my default. If there's no better play in here, then if it opens in an orderly way, we could get a 2-to-1 just to the top of the 5-day. So Intel bears watching tomorrow. I'd rather play the short side, to be honest. But that one, I've now talked myself into being a pretty good setup for tomorrow. International paper, boy, this was nice. That was a sharp seller. It was one of the biggest percent losers in here. So just cranked a standard risk box on it, held my nose, and it just kept failing all day. And it's down right here getting ready to test 36.25, and then the 10 and 30-day low down here. So that if that breaks through those two price levels, that could be a massive move tomorrow. And that was a reason I wanted to be in the position to take advantage of that. I was willing to hold that one overnight in international paper. IYR, happy to take the nice 2-day move and then the orderly sell off at the PSAR, just out of it at 1 to 2.5R. I like that one. Marijuana was a closed here. It was a big gap up and then started selling off. So I just took it. And then when it broke through the PSAR, and this is right at 7, it's been trading like between $6 and 7. And after that really nice move and the previous huge weakness, that felt like a lot of short-term players cashing the win, like me, cashing their wins, and now ready to play this back to 650 with a tight risk box, and it closed weakly. So I like that one on the short side. I was willing to hold that one overnight. The same with PBW. That's the energy equivalent of marijuana, really. I mean, this had you've seen it's had this nice cycling move. It failed right where it failed before. So I didn't stick around long on that one, and when it PSAR flipped, I hit it, and then we're holding about +1, and it closed pretty poorly. And to me, the target is down in here at 41.50, so there's more room for weakness tomorrow. Rivian was we initiated that one Friday on the rebound and the COTA 2, and it opened and then started fading, so just took it. I was just happy to cash the gift of about 2 or 3. Luis asked me a standard. I'm basically using the uh, like the R3, or in this case it was like the standard risk on this one was about the size of the PSAR flip, like it was anchored to the bottom of the dragon, and and so I just that was sort of a standard box, and that came from that. Yeah, the Thursday trade where it was that huge gap down, and it moved an MMRB off the top, and so I'm just using that as a standard risk. But in most of these cases, you're seeing me choose them anchored to the price that tells me that the move was wrong. So in this case, it would have been a violation of the belly of the dragon. So that just becomes my risk box. And this thing is moving up. If it's going to work, it should work fast. And that's enough of a risk box to get it intraday. And then holding it overnight, I can just widen that stop or sell off 80% of the intraday trade. I would start with the range stat. If you were planning on holding it overnight, I would start with at least the range stat for the overnight. When you compare that to the R10, the range stat is usually 3 to 4 times larger than. I'm sorry, no, it's 10 times larger. The frog, it looks like this. The R10 is 1/10 of the range stat. So essentially, this is times 10. The frog box is usually about three times the R10. So the frog box is in between the range stat and the R10. Okay, so I would start with the range stat, and then your choice is really the size of the R stat versus 2 times an ATR. If you want a really wider stop, that's the appropriate one to me. If you've got a winning position and you want to let that thing go for multiple days, like it's moved out nicely. So a normal progression for me would be something like the R10 on 3 minutes to get it started. And then if I'm going to hold it overnight, then probably shift to the range stat, and then shift to 2 times ATR for a much longer buy and hold, and let it just trail. The S&P, so I'm not trading that one, but in terms of a market move today, that one had basically just rolled over and closed poorly. And that's why I think those swing trades and some of the, like a larger name like Alcoa and International Paper could be vulnerable to some broader market weakness there. Treasuries was a 2-position SSC, then just a continuation, and cash that it gapped up and then started selling off. Was happy to get out of it, and I was ready to put one of those back on to the short side. It closed poorly. We're holding about +1. Yeah, and for Luis, as you can see, on this one, the risk box was to the price level that would invalidate the move, right? And that turns out to be the same size as this one, also anchored to where the PSAR flipped. Mike says, I usually wait for the PSAR flip on the swing trades, but yes. Are there times when I might front run the PSAR on the swing trades? Yeah, like like on Kata 2s. Like if I didn't get this one here, that's a PSAR flip long. But if for some reason I didn't take that, I'd be willing to take that one as a Kata 2. And here's one where, yeah, well, that happened on the PSAR flip, but it was a gap down and go. But generally speaking, the on the 30 minute, I feel like the PSAR flip is pretty reasonable. Because if you get that PSAR flip earlier in the morning, there's still 6 hours of the day, 12 more bars for it to unwind. Um, so I would say if I'm in that position, right, and then the PSAR flip, when it starts failing, the PSAR flip is what triggers the exit on this one. So I'm not going to get out of this position until the PSAR flip happens, which then says I can't really front run that to get on the short side unless I was going to try to time this so that you get rid of the earlier position before the PSAR flip, and that feels premature. So I think on the 30-minute bars, I'm really liking the way the PSARs just kind of document the turning points. Like just looking at this one in treasuries, I mean that's a pretty good before and after, right? And so is this one. I mean that's just a move from bottom to top, and this one is from bottom to top, and that one and this one. So I think the PSAR, I would just start with that. The only way I might see doing that earlier is if you drop down to a more tactical time frame, like on the 3 minute or the 10 minute, and you ended up, initiating on a 3 minute or 10 minute bar, and then when you switch back to the 30, it looks like you would have front run the PSAR flip on the 30. But in that case, I'm still taking a very specific pattern off that faster time frame. But to me, if you go back and look through those replays, waiting for the PSAR flip has been a pretty good strategy. I don't want to try to over optimize that. I mean, the numbers were kind of staggering. Now, granted, I think the conditions were ideal for our swing trading because we were getting more volatile and it was a sideways market, and we were getting larger ranges on the daily bars, and that lent itself to swing trading pretty nicely. All right, Tesla. Let me know if that didn't answer your question, or if that was enough. Okay, Tesla. So Tesla, we initiated along on Friday. It started rolling over. PSAR flipped. Wasn't persuaded. So I'm looking at that as an opportunity for tomorrow. I didn't want to hold it overnight. And I could see a tight wrist box in here like that. That's probably about a frog box, and ready to play it long or short. Yeah, and my brother notes when we're looking at the 3-9 framework. Now that's like fractal swing trading, but on 3-day bars and 9-day bars. The PSAR flip is all you really need, as he would point out. You don't even have to front run that because that's tracking really, really large money, and there's no reason to hurry. Let me see if I can. Treasuries, I think, might even show that. Like if we go out to the 3-day, yeah. I mean, if you look at the 3 days on and we're just to trade the PSAR flips on treasuries, you'd be a pretty happy camper. You get a little choppy action here, but that one, you get all of that move from 193 to 400. I mean, seriously, you know what I mean? And then on this one, look, you get the move from 300 to 100. Need I say more? So,
Hey, hey Ken,
we're looking at the 3 minute.
just for fun, look at the Aussie dollar.
Yeah, we'll get there in a minute.
Okay.
So when we look at our fractal time frames, The three you've seen me using the 3 minute, 30 minute, and 1 day. Uh, when you extend that out to the 3 day and 9 day, you actually have 5 time frames that are really fractal and geared to work together pretty nicely. It's hard to argue with looking at that lens. Like I use the 3 minute for an intraday turbo, try to grow it into a 30 minute intraday swing. If that works, hold it overnight. And then if the daily keeps working, I can convert that to a 3 day aggressive one. And then if that really gets good, it becomes a long-term position trade like 9 day. And then the 9 day does a really nice job of catching huge market turns like after COVID or financial bubbles and all that stuff. Let me. You're saying Aussie dollar there, Bill?
Yep. Aussie
Yeah,
dollar. Was showing Luke the other night.
yeah. And I've already hit U.S. still. So let me just shift over to the.
I didn't mean to derail you there, my friend.
Yes, you did. So what was it? The 9 day or
Yeah.
the 3 day?
9 day.
Yeah, I mean this is sick.
Yeah. Look at that from 2020, April
Yeah,
to
now
April.
you're getting these are regime changes. You know, from 60 cents to 78 cents is 18 cents on 60, which is a 30% gain just in the currency and just cruising.
When he plugged that in, when we were just messing with him and Ed, he said it was 225R.
Yeah.
So
So yeah, so just as a review and a reminder, the fractal power of these different time frames 30 minute 3 minute 30 minute daily 3 day and 9 day, each one of those is far enough away from the others that you get like the 3 day 9 day acts as a fast and slow. Daily and 3 day works. This 3 minute 30 minute and daily, you've seen what I've been doing with the intraday hybrid swinging. um, those work pretty nicely. The beauty of the 3 day and the 9 day is this: that I think most of the mammals on the planet look at daily. Oh man, is it getting ready to crash on me? Shoot. Sorry. Pardon my language. Yeah, so if you look at the daily, weekly, and monthly charts, if you're a regular mammal, the 3 day sits in between the daily and the weekly. So it has a tendency to smooth out the daily price volatility, and it minimizes or reduces the impact of gaps because the bars are bigger and you only care about the gap once every 3 days. But you get twice as many actionable bars and signals as the weekly. So it's smoother than the daily, but faster than the weekly cycle. And then the 9 day is really like 2 weeks because it's almost 10 days. And that sits nicely in between the weekly and monthly. So it smooths out the weekly and you get twice as many decision points as the monthly. So, and then they are fractal with each other in that factor of 3 between 3 days and 9 days. And then the 1 day, 3 day, 9 day keeps that standard fractal multiplier that we like to use on the regression lines, but now also on the time frame. So I just think that it gives you really good flexibility on your time management. All right. Let's shift to sniper trade of the day. All right, so here was this one was the close on Friday. Here's the OR3. Here was this bar broke out, so we get the entry long here. Standard risk box. Now this is a case where the standard risk, the R10, turned out to be almost anchored right on the PSAR flip anyway. So that's pretty cool. And then in the very first or second bar, that thing just explodes up. So we can get our stop up and protect that entry. And now we can lock in no lose plus dinner for 2 with that nice little wedge. And now it's working nicely, and then it keeps going up on that very next bar. So now you get to decide where do you want to start pegging that. At the previous bar's close, at the edge of the dragon, at the low of that next bar up. Take your pick. You've got no lose plus dinner for 2, which just has already turned this into a science project, so you don't got to sweat it. And now from this close, it opens, it runs all the way up to here. It opens, it starts rolling over, and now it starts coming down to here. So you're holding, your entry from here. You put your first wedge in right here, and now you just got to decide out of that gain, how much of that is yours. Here's where that bar closed. You might give it, hey, if you continue to fail, I'm out there, or I'm out at the 2 bar low, or I'm out at the no lose plus dinner for 2. And really, this is about 1R right there, based on the size of the wrist box. So even if you just did 2R, that was probably 2R. So this one would lock in 1R. That one would lock in 1.5, and this would lock in 0.5. So 0.5, 1, 1.5. So by vote, where would you place your exit? At 1, 2, or 3? At 1, 2, or 3. Just record that for yourself. I see a lot of 3s. I wouldn't disagree with that. I took it at the edge of the dragon. That's pretty close to 2. And now you're noticing the that early burst. Really, no more follow through. The R10 rolls over, hits the edge of the dragon. Now the R10 has entered the dragon, hit the spine, coming down around in here. So if you were ever going to get short, this ain't a bad place because you can still play it down to get this. And then you might put your stop at the top here. Technique. Or just caught a 2 on the reversal. Standard wrist box. And after that first burst up, your stop is here. Lock that in. In your mind, make that a solid brick of goodness. That has a real substantial feel to it. And now, as this is starting to try to hold support inside the dragon, I think that's probably where you need to be. But when you're in this bar, I think your stop needs to be about here because you're respecting that support level. That feels reasonable. Like RLXD hits the PSAR and bottom ticks you out. I tried the second kata 2. That failed immediately. I hit the exit here and got filled there, so that's like a collapsing dragon exit. And still, that's about, even that exit is about minus zero point 0.5, because I don't need to stick around longer than that signal, even though that's the full 1R. I'm not sticking in there. I'm not going to like, well, I'm going to stay in and respect the 1R loss. No, the signal to get out was when it failed here, because notice you got these descending highs. That's all the information you need right there to say that one is not working, and I need to get out of that. Now, again, you could make the argument you might think about stopping and reversing there, because you've got a move down to here, and then a move all the way down to the opening that's available. That wouldn't have lost money. And in fact, I didn't draw it correctly on here, but that I did stop and reverse that one, and made a little bank here at the edge, and then that set up this one for the kata 2 with the normal risk box. Had a nice run up, but then couldn't hold. This is typical behavior for a big broad index, because we're trading the Dow 30 right here, either the ETF or the YM futures contract. So this nice orderly move, routine exit at the edge of the dragon, gains +1. PSAR flip. I let that one. Move like a wrist box off the peak, and that was also from summer turning to fall. Second position short. R10 reverses. Winter became spring here, bottoms out, crosses the dragon, exit at the PSAR. That's pretty orderly. That's not unusual behavior for DIA. The YM, very orderly index. And I think that was it for the day. Yeah, we were getting close to, and I was making some decisions at that point about holding, exiting like the Alcoa and or exiting a Cliff and U.S. Steel, and going through some of that thought process. All right, let's see how the traders traded today. Here's Nolan. All right, he brings home 1.5 today. You'll notice that he's now about 900 trades into his practice runs, and much more orderly, a lot smoother, simplified graphics. He recognized that there was a K2 that he missed right here. It probably would have paid off. There's probably another one here. But by this time, that's really not much of a K2. It's so choppy. And notice that the Z3 lines have pinched. So if you enter this one, recognize that you are entering right in the middle of a crocodile river. And you're better off waiting for the Z3 lines to begin to expand on that breakout. The other possibility is on this one was this collapsing dragon kind of a gizmo right there. I like that one as a kata too. It's kind of an aggressive. I don't know that what we have is a lower high. That's one where I think he's front running the collapsing dragon on the PSAR. I think that's actually what that is. So maybe what you got is a double top and an owl entry or something. I'll live with a K2. That's a pretty, and then it stabilizes right here into a doji, and he says, you know what? I'm going to make my net today 1.5. I'm happy with that. He might have thought about an additional one, but now it's getting to be later in the afternoon. So he takes the 1.5 and calls it a day on that one. Nothing wrong with that. This is less. Here's a. Now notice he's got this configured so that the Z3 lines are collapsing and compressing, and then it gets abnormally quiet, which is why those are now in the yellow. So it's a little harder to see. So that's where the Z3 lines are. So he now plays a Z3 breakout. He gets paid, re-enters, kind of scratches, gets short, gets paid. Kata 2 gets paid. PSAR flip, scratch. Oh, we wished we'd have had that one. Yeah, but if you're not there, it's kind of hard to trade, to be fair. And then this is, where we go? This is Arch. Now, the move he gets is 1.7 when he was available. There's your PSAR flip after the harsh winter. And that's 1.7 right by the numbers. Notice that he's got some. He's working on his almost like a hybrid frog breakout. So, to me, this move right here, off the collapsing dragon, that's the one I like. And then you get a nice move down here, and then this stabilizes, and then when it collapses again, you've got plenty of room in here. This had been the 2R battle drill. That could have been 7 to 8R if he'd have been around available. But this is, you take the trades that you have when you're there, that's 1.7. That's pretty nice work. Well done. Hey, let me put a plug in for that 2-hour-long Creativity 202 lesson we did, the check-in session from Sunday morning. Holy mackerel. That may have been the best 2 hours in the last 5 years. I mean, those guys really knocked it out of the park. And that's only the second lesson of 30. I shudder to think where they're going to be. There was so much goodness in that one particular lesson that it's almost a workshop in itself. If you just listen to those 2 hours and chewed on each one of the insights, reflected on it, and then asked good questions, that's basically an entire workshop all in advanced trading itself. That's how good that session was. All right, let's get to dashboard 1. The decay in the market, we're back into bearish normal. So we got to attend to that. We're 2.3% below the 200-day moving average. Now remember, the way we compute that is whatever the 200-day moving average price is, then plus 2% of that is what gets it into bull. 2% below that is what puts it into bear. Otherwise, this region in the middle, plus or minus, that's where it gets sideways. Because when it's that close to the average, increased volatility and choppy sideways is much more likely. So there's usually less of a follow through. It takes some time for it to get traction and grind. Like we've already seen it try once to get up into the bull. It had 5 or 6 days of bullish, but it couldn't really follow through, and it dove back into the sideways, and now we've just tipped into the bear again. So this is like maximum chaos getting ready to happen here. And we're seeing, the previous strength was enough to bring those guys up, but now we're seeing weakness down. Um, the risk Z is rolling over, risk off now. Let's look at the Dow Tactical. There's some 5DDs in here. Plenty of auto framers. Like there's a 6-1 on Home Depot. Nice. A handful of auto framers here in the ETFs. Standard planning factors for mechanical traders with the auto framer and the squeezes. I'm going to jump down to the. I want to just take a look at the S&P 500 movers. No double greens anywhere. So this was actually a pretty quiet day. Not much to choose from. And it was kind of drifting into the bear, if I can say it that way. Yeah, let's come back. In the auto framer, for our tactical set, let's just zoom in a little bit on that. Only a handful better than 2-1. VIX, Bitcoin, and Tesla are better than 2-1 on the auto framer. Brazil just started its move up, so I still like that. That has plenty of room to go. And you can already see that the metals were really fully valued. They're still pretty close to the 10-day high. So that was a good time to have cashed the move when it was available. That's sort of the secret on that one. Let's see, fit page. All right, dominated by the spring, but still plenty in the winter. U.S. Steel and Merck have the strength in the large caps. Mexico strength. Now remember, this thing was a big strong move and a slight pullback. It didn't really fail further, so I'm ready to play a continuation pattern if it holds support right there tomorrow, and then if it breaks above that previous swing high, then that is going to resume its summertime run. So special case in Mexico right now. Look how quiet everything is in our tactical symbol set. This is not behavior you would associate with a raging bear. This is like a sleepy bear, and that means maximum chaos. Is he going to go back to sleep? Is he going to wake up hungry? We don't know. So keep your powder dry. Standards on the risk index or NDXs. Tesla, clean energy, Nvidia, down to about Intel. Those are all very volatile with reasonably large fraud quality numbers to give us a good ratios. Those are some pretty good candidates right in there. All right, that's everything we got for today. We'll get this published and processed, and we'll get them tomorrow.